Good evening, Ira Epstein of Linn & Associates with your Thursday evening metal wrap-up, and this is for July 23rd, 2020 at 5:50 p.m. Well, interesting day. We're following through with a bit of a decline in the silver market, which has been just an unbelievable stellar market to the upside. Gold market, I don't know if you're aware of it, but it settled within today about $2 of its all-time high settlement price. Now, it's got a ways to go to hit the all-time highs of the 1920 level, but still very powerful. Dollar index continues to the downside. We had a small correction on the close and a bounce right now happening in the evening session in the stock indices. If you look at the energies, they're pretty flat right here. They're sort of stuck in the Brent in the $43 zone, $41 zone in the as we look at the crude, and we're looking at interest rates around the 5.9 level in the 10-year note. So let's take a look at this chart level if we could and get up to it. This is where you were yesterday. I left this price because I wanted you to see it, and you extended through it. Now, yesterday I didn't put out these videos, as you know. You may not get them every day all the time. My subscriber videos all the time. There's not going to be a question. These don't compare to what I do there. You have to be in a deathbed for me not to put them out. But you can see the market just taking off to the upside. When we look at an August gold daily bar chart, and we should start next week, moving to the December contract. That's what I'm going to be doing. So the August, if you buy it now, you can get delivery come the 1st. I don't know if it would be delivered on or not, but that's the reality. When you look at the pattern, you've got higher lows, higher highs, bullish. When we look at moving averages, bullish, and now that 18-day average is now nicely over the last break low of 1794. So even on a very, very hard break, that number is going to be an important number, and it should keep climbing over the next few days because it's going to drop data back from here. Remember, an 18-day average takes the current close price of 18 days and drops them back here, where you can see they're all lower than that as you go back into that area. Let me come back here. This is the Bollinger Band. Now, be nervous about this. You've got 1, 2, 3, and today could even be, if on Friday it closes higher over the Bollinger Band, the 4th day in a row. 5 is like a rubber band. You've stretched the market. That does not mean you're looking for the market to crash. Not at all. It's saying that the market is super strong, but it's also saying it's ahead of itself. So at some point here, you're going to roll prices to the right-hand side of that Bollinger Band sooner rather than later. I give the market going into Friday a 2% chance of staying over the upper Bollinger Band on a closing basis. So I'm looking for the market to move to the right-hand side of it. When I look at slow stochastics, they've embedded. So now a new story's unfolded. Now I can see that on the pullbacks in the market, and I'll point this out in my morning subscriber video, not these. There is a zone where I'll be looking to be buying on the break on it. I'll point that out in the morning videos, but this is not the area. I never tell clients to buy over a Bollinger Band. There's no situation to do it because you're betting against yourself. Only 5% of the time does the market stay over it, and when you get successive close, that 5% squeezes in. Don't believe me. Go back and count on your own charts. See how often lead months do what I just said, and I think you'll get an idea. In the gold-silver ratio, and this is August gold versus Sep silver, and I might move to D gold, D silver to get just a clean picture of this ratio, but you can see it's gone from the 125 level to 80. You've had a 1/3 retracement in it. Nice move, and I doubt that it's going to be anytime soon, may not be my lifetime left, that you're going to get back to that 125 level. It just looked to me like an unusual event, something I'd never seen. When we look at silver, like gold, it's ahead of itself. It's got 1, 2, 3 settlements over the upper Bollinger Band. That begs the market to get back to the right-hand side here. That's one of the ways. For those of you that seen my morning subscriber video, you know what I'm about to say now. 3 flips of the window envelope. 3. And when you get 3 flips of the window envelope, and those flips are outside the Bollinger Band, it offers another resistance zone. Don't know what I mean? Join my subscribers and you learn about that. Then we look at the embedded reading. It's still here. So no, I'm not looking for a big reversal in the market. I'm looking for a correction in the market, and I think it's going to continue to be bought. In the copper market, we've been at one of these funny patterns. We've been in a pattern of a lower low, then a higher high, and backing and filling. We had lost the embedded reading. When you lose an embedded reading, at least the way I teach, I look for price and the 18-day average to come together. You don't have to believe me. Take a look at the NASDAQ futures and what they've just done on the correction. It took time. But that leads to it when you lose that embedded reading. Does it happen all the time? No. Does it happen a high percentage of the time? Oh yeah, a real high percentage of the time. Don't believe me again. Go look at it yourself. You're still overbought in this market. So yeah, I'm friendly, but no, it's not in a buying mode, as from what I can see. In the platinum, we had a breakout. You were all this sideways action. Let's see if I can get you to see this. This is what you call a pipe. Now, I define a pipe when you're going sideways in the market. You're going to break out one way or the other at some point. It's because price is winding in that pipe, and it's like a spring. It just keeps winding, and it's going to burst one way or the other. Some traders will do option strategies. They'll play boxes even in them. And in the box, they're buying puts, writing puts, buying calls, writing other calls, counting that the market's going to break out of it, and they'll catch the premium on one side to make some money on it. I'll let you figure that one out. I'm not the world's best options trader. To me, it's too difficult to play time, what the option's going to do, and be right all that. When the futures, I'm either right or wrong, and I'd rather be right or wrong in the futures contract. Admitted, the futures markets move in 100% delta. Options don't. You've got higher lows right there, higher highs rather, higher high, settlement over. Now what happened right here is what I wanted to show you. If we come to this day, you closed out of the Bollinger Band in the top part of the day. The next day you did the same. That's my definition of a breakout. You'd have to get back under these lows to prove that it's a false breakout. Now I call this a base. So it converts itself from the pipe. Now I know it's a base, not a top. And market 2 days in a row, 3 days in a row over the upper Bollinger Band. That gives me coming into Friday, which is tomorrow, a 2% chance of the market staying over the upper Bollinger Band. And no, that's not reason to be short. It tells me that get my buying guns ready if I get an embedded reading, which I don't have. So I have a market that's overbought, showing strength, broken out of a base. When I come to the palladium, same play. Here's your sideways action. We talked about it, and I prepped you for this for a long time. I said, it's going to break out one way or the other. The resistance was the 100-day average of closes, the upper Bollinger Band. You break out there, get thrown back, but then we start moving back in on it, just the way you did here. This is July 17th. So you're not, actually it's almost, if you think about it, a week ago. And watch what starts happening. The market starts gluing itself to that Bollinger Band. That's a sign of big strength coming. Does it again. You've had your breakout in prices now. You've got the top quadrants. You're over it 2 days. This market's telling you, Daddy, I want to go higher. And that's what it's saying. I'm saying, baby, go higher. And that's what I'm looking at. I see support in here, embedded reading. I'm expecting the pros on good breaks in this market to use that slow stochastic theory and be a buyer in the market. Dollar index, the gorilla glue trade again. What do I mean by that? If you take my morning subscriber video, I go through these in detail. This is when the market has just glued itself to the Bollinger Band and just stays there. It is a sign of extreme weakness. Can you get corrections at any point? Of course. What do you want to do with them? Well, when you have an embedded reading, you want to do what? You want to be a seller into them. So you're sitting there going, yeah, give me a correction. Give me a correction. I think this market will let you then back in on the short side. Maybe you can participate. Lose the embedded reading, and then I think you're going to the 18-day average. But the bigger trend, it's set in stone right now. Dollar lower, other currencies higher. I know that not all of you like to trade the futures markets. That's fine. For you, I created, and it's taken off as my most successful product in decades, my Spider ETF videos. And in those, I review for traders. Now, this is not for investing. Remember, I view everything from a trading point of view. And let me explain the difference. Investing is, why don't you just look at the market fundamentals, figure out what it's doing, what do you need a chart for? You're looking to buy breaks and try to hold the market. That's an investment. Trading, you're looking at all these numbers that I'm putting together and you're trying to figure out where's the trade opportunity. It's almost, if you watch John Nigerian with his option trades on CNBC, you think he's not a trader? He's not an investor, he's a trader. He has 40 different things at one time. He'll tell you that, he's honest, and he wants to be in a week at a time, 2 weeks at a time, using his option strategy. I don't see anything wrong with that. I know John, I know his brother. And we all come from the same school. That's what you use the leverage of the markets for. The investing, something else. I think your portfolios belong in investing for the longer term. Shorter term, this is the action house. And this is what I cover in detail. I will have 40 charts on this very shortly. Now, there's another thing that I'm doing. Today I wrote everybody that is a paid subscriber, and I'm asking them what days they want me to start my webinars. Now, let me explain how this works. With the price of a subscription, be it to my Spider ETFs, my morning subscriber video, or my full research, you will be invited to my webinars for free. It looks as though we're going to do them on weekends. That's what people are asking me to do. People that are not will be paying to come into the webinar. They'll pay it on average $2.50 per webinar. If they want to view it on the website, that'll be fine. It's going to be another $2.50. So either way they go. Join with what we've got here, free. So it's another thing that I've come up with to give you reasons to stay with what I'm doing. And that is where you get one-on-one in a 30-minute to an hour session to ask me the questions you want. I'll give you the answers as I see them. How do you get all this? It's simple. Go to our website, www.iraepstein.com. Go to the word research. Everything's explained there. I'm Ira. You have a great day, and I'll let you know about these webinars. All my cameras for it, not these. There's another set that I have. All came in yesterday. That's one of the reasons I wasn't doing anything, and I had to set up that whole project. It's all done. I'm Ira. You have a good day.